We continue with our series Hello 2017, and today in that series we present to you someone who is an expert on practically all aspects of the financial sector. I have with me Mr. Puri, the Managing Director and CEO of UTI Mutual Fund. Well, those of us who have been around long enough know that Mr. Puri is a very close and intense observer of the banking sector, a specialist in that area, and that is at the heart of a lot of changes. So we have a lot of questions and trends to learn from Mr. Puri. Thank you very much for giving us time today. Well, first up, before I ask you the trends for 2017, Mr. Puri, the big event that we are sitting in is the demonetization. What is your understanding of this process? Is the pain going to last for this quarter? Would it last for 2 quarters, that is the first part of 2017, or could it be a little longer?
I think the pain is probably likely to last until the end of the financial year. I personally don't expect it to persist much beyond that. I was happy to see that we've started to print notes offshore as well, so more cash will come into the system. So I don't anticipate beyond March that there will be much pain.
Okay, but could there be knock-on effects? Do you see, FY17, FY18 as a period where there could be, some shadows, probably because of the real estate sector, or because of, some permanent dislocation in the informal sector?
See, I think it depends on the larger view you take of demonetization and how you view the overall picture.
How have you viewed it?
I think there's one piece which is certain to me, that the benefits of this in terms of expansion of the tax base is very real, very likely, and I think is empirically sound. The second element of this is a leap of faith. You have to believe that the taxes that are going to be raised are going to be better used, which means we are going to have a government that is actually committed to good governance. In economic theory, one of the concerns that many people, including people offshore, have had is that today we have a functioning economy where our entrepreneurs are able to make things work. Some part of that is in the shadow economy, but it doesn't matter because the system, the supply chains and so on are functioning. We have absolutely put a stop to that now. The leap of faith is when we restart that engine and you actually have a broader tax base, will you have a responsible government spending process where infrastructure, education, healthcare, the social security net, the broadening of the formal sector, will that come into being, or will we have another wasted opportunity? I happen to be ready to take that leap of faith and say that we are at a point where this government, midterm, is indeed committed to taking forward economic transformation, good governance. Therefore, the benefits are going to flow to us. And that, I think, is a central divide here between the skeptics who fundamentally don't see that anything is going to change and that this is just a one-off intervention and an ill-thought-through, poorly executed intervention. And others who say, no, this is part of a broader plan. You have had Jan Dhan, you have had GST, you have had Aadhaar-based UID. You are now going to get digitization of land records. You have a broad movement towards expanding India's tax base and formal sector, and a government that is committed to better governance and reforms. So isn't that the best way to take us to being a middle-income country? And if you take that leap of faith, then this is surely a good thing that is happening. Very good for the markets over the medium term.
Okay. Well, you are beginning to convince me, but the market out there is still, deeply divided between bulls and bears, between skeptics and optimists. Let's just pause and speak about the markets. We've seen, in the past 8 weeks, the markets shed off a goodish bit, partly because of Trump. I mean, Trump and demonetization hit us on the same day. Do you think we have much more to lose before the markets are able to pull themselves up?
Actually, yes, the markets, of course, we talk of volatility and uncertainty, and I think that 2016 actually has been a year where, for better or worse, some of these uncertainties appear now to have been resolved. If you look at Brexit and Trump, they are answering questions as much as asking them. They're answering the questions about, is the world seeking a shift, a new paradigm? Is it seeking to re-establish rules of global trade, globalization? And you may not like the answers we're getting, but we are getting answers. And this is the problem. Be careful what you wish for. The markets were wishing for certainty. We got certainty. It wasn't necessarily the certainty everyone expected. But you can't argue any longer that we don't have a better sense of where we're going. We are going in 2017 to a world where there is going to be realignment. Some of that realignment is geopolitical, which is represented by the Trump presidency. We are seeing signs of that in East Asia, in the Middle East, and with Russia. Some of that is economic, which is the view on Fed interest rates and the impact that has already had on the dollar. And by the way, has spurred a tremendous rally in the U.S. markets. So you've essentially seeing a very bullish phase in the U.S. markets.
Yeah, but that has also been a short EM trade. The long DM or the long U.S. trade has also meant a short EM trade. Would you believe that there will be more to come as President Trump is sworn in on Jan 20th?
So I think that is a temporary rebalancing. It had to happen at some point. I actually think it's a good thing that it's happened earlier rather than later, because I think the rebalancing is to India's advantage. What has happened at this point is you've seen the dollar strengthening, and to that extent you've seen a general pullback from emerging markets, rebalancing. India is still at more or less neutral weight, if you like, within EMs.
Yes.
EMs have seen flows out. No one has gone underweight India just yet. They're either still neutral to modestly overweight.
But we have underperformed, if you please.
We have, so in line with other emerging markets, we have seen that rebalancing, which to my mind was inevitable. But there are two silver linings, if you like, to this episode. One is that even as this has occurred, we have seen a stronger commitment to domestic economic reform. And in a way, I think the fact that we are seeing continued uncertainty in the West further strengthens our own resolve and our own focus on the need to get our own house in order. And the central bank and the Ministry of Finance, I think, are both acutely aware of that. And you hear that in their statements. So I think it's a good thing that the world is keeping some pressure on us, because we tend to operate better when we're under pressure. And to that extent, flows in our domestic markets have not dried up. They have certainly tapered off somewhat, but you're still seeing steady flows coming into through our DIIs, mutual funds, and so on.
Yes.
And the second is, if you hear the commentary on India, even as flows have receded from global investors, the commentary has remained very positive. Some hesitation because of demonetization, where people are a little bemused, trying to form a point of view, but broadly very positive commentary. So I absolutely anticipate, as faith and conviction builds around our economic reforms, as people sense that we are going to use the budget that is promised to use the benefits of demonetization, you will see come middle of next year, India back in favor and back to overweight in most portfolios. So I actually think 2017 will be a year of more certainty and more stability for our markets in 2016.
We are at closer to 3.5% inflation as of the last number we have, November number. There are some people who believe that to kickstart this economy, a series of rate cuts from the Reserve Bank is what the doctor orders. How much would you pencil in?
I would hope we'd see actually fiscal rather than monetary action now. I think the time has changed for us to focus on monetary action. I think that's, for reasons of global imbalances, a little dangerous right now. I do believe we can take a view that our fisc will be in better shape in 17-18, and that gives us room for fiscal expansion. I fully expect that. The signaling suggests that. So it's time to think of fiscal, not monetary policy. I would leave well alone on monetary policy at this point.
Is there material for a fiscal push?
Yes, I think, there's a bit of a myth about this return of old notes, because first there's just a miscalculation. The numbers include new notes and old notes, but putting that aside, the
governor also said that legally he has to keep the liability open.
Yes, and I agree. I don't think there was going to be this bonanza from the denotification, if you like. I think that, and I think Usha Thorat and others have rightly pointed out, and I tend to agree with the more conservative view on this denotification. There's no bonanza there, but the improvement in governance from money now having come into the formal banking system, I think is very real. I think people are underestimating how difficult it is going to be to recreate flows of black economy. This money is now monitorable, it is trackable. You're not going to be able to take it out. I do believe there will continue to be limits on cash withdrawal and pressure on digitization. You will therefore see much more accountability and therefore participation in the tax base of this country expand.
But to come back to the here and the now, which is the budget, it is on us in about 32 days or 35 days.
Yes.
You know, we are still getting kind of idiosyncratic voices on taxes. There is the PM saying that, you know, at the SEBI meeting, that people have to pay more if they make more money from markets. And we have the FM on record saying that the stage is set for perhaps lower corporate taxes. What are your own expectations?
Well, I think the finance minister clarified that what the Prime Minister did not mean was that long-term capital gain tax. Let me take this opportunity to immediately underscore that point, because that is a critical point. It would obviously not be the right time, in our view, in my view personally, that to remove the long-term capital gain tax, and I'm glad that the FM has clarified that that is not what is in mind. There are a number of other loopholes that the government might possibly have in mind. There are issues related to dividend stripping, there are issues related to bonus stripping. These are loopholes that the capital markets use to legally avoid tax today. I think some of those could be closed. And personally, I don't think that's such a bad idea. I think those are loopholes and they should be closed. But the broad structure that we provide today for the incentives that exist in terms of taking risk with long-term capital, I think those need to remain intact for some time to come. And I don't expect those to be impacted. On the issue of lowering, in some way, direct tax, both corporate and maybe income tax, perhaps by raising thresholds, there certainly seems to be a strong expectation. And to some extent, that would provide a stimulus to take into account the depression, the temporary depression created through demonetization. Some form of stimulus is necessary, I think. You can't have a hollowing out of demand followed by a complete lack of stimulus.
But how would that stimulus, how would you rather that stimulus come? Through lower taxes and therefore a boost for consumption? Or would you rather that they take more money and spend it on probably railways or roadways?
I think in the short term we do need a boost to consumption. I think it would be risky to, and it would further feed the pessimism of the skeptics if you did absolutely nothing in terms of demand stimulus. So I do think there's room for a demand stimulus. I also think if you can take a view, and no doubt the government will be crunching its numbers on this, that indeed the tax base will expand and that indeed GST will be successfully rolled out, at least